But let's move on and talk about Zydus Life then. And Ashish, on the charts, how is Zydus Life looking like? What are the technicals now indicating? Last 6 months, we've seen 47% return. Are you still expecting an upside?
Yes, indeed, because if you look at the entire pharma space, the entire space has been buzzing around, and Zydus Life has shown a very good momentum on the upside. It looks like to be in the third wave, which is usually the strong move. And we can expect short term, and possibly I think that is going to be also crossed. We can even expect further higher levels of around 750 levels. And so one can create long positions at current level. And on the downside, maintain a stop loss of around 611.
Okay, keeping an eye out on Zydus Life and those levels over there. Let's move on, talk about another earnings candidate. We have Indiabulls Capital that is in focus. Weak set of numbers that was reported by the company. When you look at the NII, that's seen a decline of 12% coming in and is only coming at 90 crores versus 102 crores last year. Overall, the total income is down by 7% as well. Profits of the company down by 30. Profits came in at just 31 crores versus 45 crores last year. While in terms of the impairment reversal, that's come in at 12.8 crores for this quarter as well. So let's keep an eye out on Indiabulls Capital today, down and out in trade. It's locked in lower circuit. That's 5% down tick there.
That's Indiabulls for you. Taking a note of the markets very quickly. If you see Nifty on an intraday basis, it did slip below that 19,300 mark right now. It is just tad above the 19,300. It's at 9,310. We've given up almost 230 points from the day's highest point. But let's talk about HPCL then, and that one also is under pressure on a quarter-on-quarter basis. If you look at the numbers, there are a good set of numbers coming in for HPCL. If you look at the revenue, it was higher by about 4% on a QOQ basis. You had the PAT that was higher by 93%. Also, the margins also substantially higher on a quarter-on-quarter. There's a note that's coming from Jefferies where they're maintaining their underperformed stance on HPCL. No doubt they've gone ahead and hiked the target price for HPCL. The target price is now at around 225 rupees per share from 205 rupees per share. They're saying Q1 was strong, but they're saying that the best is behind for HPCL, and that's one of the reasons why you're seeing that pressure on the counter. They're saying that the earnings have peaked with a narrow discount on Russian crude offsetting recent strength in the refining margins and rising crude oil prices hurting the marketing. They're also saying the preferential allotment to government could lead to further capital allocation concerns. So yes, you have Jefferies flagging of some concern, maintaining an underperformed stance, and stock is exactly reacting to that. 2.5% downtick coming in for HPCL despite strong set of numbers in the quarter gone by.
Let's move on and talk about Zee Entertainment on the technicals. And Ashish, when you look at it in the last 6 months, seems like the stock has surely picked up some bit of a pace in the last 1 month specifically. Last 6 months is almost just a 4 to 5% return, but last 1 month, 27%. Is this an indication of some sort of momentum that Zee has picked up on the technical levels, and should we expect that to continue?
Yes, if you look at past 1 month, ZIL has been forming a very clear higher high and higher low pattern, which is as per Dow theory. The trend is reversed on the upside, and this is seen after a long time of downward trajectory that we have seen in this stock. And it also formed a double bottom around 175 from where it bounced back, broke above the neckline at around 220. And the target for this stock comes to around 270 on the upside. So there is still room on the upside for ZIL. It can move towards the level of 270. And but maintain a strict stop loss of around 210.
Alright, so that's the take coming in on Zee Entertainment. Vamakshi, coming to you, L&T Finance. Why is this particular stock in focus today?
Well, Cheryl, reports were indicating that two affiliates of Bain Capital are selling nearly 7.9 crore shares on nearly 3.2% stake in L&T Finance Holdings in a block trade. The floor price, according to the reports, has been set at 128.1 rupees per share, which is 1.4% discount to the stock's last closing price. And in fact, Citigroup is sole book runner on the deal, is what the reports have highlighted. So largely on the back of this news flow, we do have L&T Finance Holdings in focus today. As of now, the stock is trading near the day's lowest point, down nearly 4% as we speak.
Let's move on, and at stock number 30 today we're going to talk about IRCTC. Ashish, how is IRCTC looking like on the charts? It's managed to give mild returns across the years. Nothing very bumper and sort of an up move there. What is it that you're getting in terms of IRCTC? Should we expect a sharp up move?
See, IRCTC is forming a very classic inverted head and shoulder pattern, which is like a bottoming pattern, and it's being under formation right now with the right shoulder nearly completing. And if there is a breakout above that 670 mark, we can see a very strong rise in this stock. towards the pattern target of around 750. And on the downside, 610 is a very important support. So the risk reward looks very promising. And I think the stock is poised to be moving higher from here on, given that the pattern, technically the pattern looks very strong.
All right, that is IRCTC. But Harsh, KSB Limited, why is this one in the spotlight?
Largely on the back of results, Cheryl, and good solid set of numbers. In fact, the stock is up and buzzing, up 17%, almost now 18+% as we speak, hitting its all-time high as well on an intraday basis. The revenue is up 32% on a year-on-year basis. Very strong numbers. 591 crore is where the revenue number has come in at. EBITDA also going up by nearly 40% year-on-year. So you're seeing quite a bit of margin expansion also coming through. 83 bips on an already very healthy margin number of 13.6%. So you're seeing margins of roughly 14.5 odd percent. When I'm looking at it on a year-on-year basis, that's a healthy margin increase. And profit after tax also going up 33% year over year from that 47 crore mark to the 63 crore mark. Definitely a positive, headed in the right direction, and the stock is up and buzzing.
Let's move on and talk about IDBI Bank. That one is trading at a 52-week high today, Ashish. And in the last 6 months moved up from those 40 levels to 63 currently. How are the charts looking like now for IDBI Bank?
See, if you look at these kind of stocks, and IDBI has managed to show a very strong breakout from around 60 levels. There are the movement that we can clearly see in the PSB banking space, and over here we can see after a consolidation, a good consolidation that happened around 58, 59, which was looking like an accumulation. We are now seeing again the stock is ready to buzz on the upside and trend on the upside. So long positions can be created at current level. It's a good entry level that I am finding on the chart. And on the downside, one can maintain a stop loss of 59 for the target of 75.
Okay, keeping an eye out on those levels for IDBI Bank. Let's move on, talk about Dixon Tech as well as Syrma SGS. Now, these are these EMS companies which are in focus. And why is that so? Now, what came in as that the government has laptops, tablets as well as personal computers. Now, why is this so? Because obviously the PLI that has come in on IT hardware, which is to support domestic manufacturing, and this is furthermore a decision in that front, so that more of these players actually get more manufacturing opportunities, and that is the main reason for this, and that is why we saw Dixon Tech is trading with gains of almost 6% as of now. Syrma SGS trading with gains of 1.5% as well, and this is going to be with immediate effect. So obviously this notification will be surely supporting Dixon Tech in terms of they already manufacture laptops for Acer. Other than that, even Syrma has a small portion that they're manufacturing in terms of laptops as well. Very small portion as of now, but the share in the market and the growth opportunity becomes big for them, given that there will be PLI schemes that will be supporting them in terms of growth once they apply for that as well. So on the back of that opportunity that we'll be seeing coming in, we're seeing both these stocks buzzing in trade.
All right, moving on. Ashish, let's talk about MOIL. Yes, we're seeing some sort of traction in the metal space, but do you think that even MOIL will also get that traction?
It looks like there is some selling pressure that we saw from the higher end today, but I think it's because of the selling that we are seeing across the space. The overall chart pattern looks positive. The volumes are substantially high. If you look at compared to 20 days past average volume, it is substantially high. It was yesterday also, it was buzzing with huge volumes, and today as well. So I think something major is happening around these levels. Looks like an accumulation to me, and we can expect the stock to move towards the level of 205 over short term, with 185 as a stop loss.
They're keeping an eye out on those levels for MOIL. But let's move on and talk about Zomato, Harsh, and what are we expecting in terms of numbers from Zomato this time?
Well, yes, so Zomato will also be in focus largely on the back of earnings. And let me try and break down what those are. You are expecting the revenue to come in at around the 2,288 crore mark versus the 2,056 crore mark. It's expected up sequentially around 11% thereabouts. You're expecting a loss of around 152 crore versus a loss of 187 crore in Q4. And EBITDA loss is expected to shrink, and that is of course a positive, headed in the right direction. You're expecting EBITDA loss of roughly 180 crore versus the 225 crore loss number same time last quarter. Of course, the Blinkit adjusted EBITDA loss will also be in focus, 190 crore odd. You're expecting order frequency to improve sequentially, expecting Blinkit to continue to deliver a strong growth trajectory. You're also expecting food delivery GOV to grow by around 9% sequentially. IPL hopefully has aided some of those numbers as well, and of course Zomato Gold will support the numbers as well. Among the factors to watch, you're expecting a focus on profitability across food delivery as well as quick commerce. That will be key. Some amount of comments on that. Also recoveries in food ordering, whether that has really happened or not, and of course an update on Blinkit. All of those will be in focus on the back of Zomato's results.
Alright, so watch out for Zomato numbers, most likely post-market hours. But on that note, we are totally out of time on this edition of Market Fatafat. Thank you so much, Kunal, as well as Ashish and Vamakshi and Harsh for joining us on the show. It was a goodbye from Vinny, myself, and the team that put the show together. Stay tuned. Closing trades coming up next.
Co-powered by Jana Small Finance Bank. जमा करो जना करो.
टिप चाहिए, पैसा लगाना है तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ.